All right, so welcome to the last, probably last but not least stream. It's Friday, it's New York AM session after two enormously large ranges on Wednesday and Thursday. And we just now opened up at 9:30 with a quite large premium opening range gap. We rallied up first, took out the buy, so liquidity relative equal highs, and then price just completely melted all the way down to the low of the opening range gap of current day, which is Friday. This was the premium opening range gap. Price opened here, rallied, melted not only the consecutive encroachment, but to the low of it, which in itself, by itself, from the high to the low, offered 407 handles in the course of 15 minutes this straight run, lower 20 minutes overall duration of the session. Pretty crazy volatility. But nonetheless, let's see what will be available for today's silver bullet hour. Again, my anticipation for what's likely to occur for today's trading was, during the London open session, I was expecting the day being consolidated and not really expanding one way or the other. And consolidation was the theme of the day. And that's pretty much what we've seen so far. It was just consolidating since the London, consolidating pre-market, and then this large run up, and then complete decimation after that. So yeah, the board was basically cleared, buy side taken, sell side taken, and here we are. That bodes well for interesting session. For sure, might not be the easiest one. But yeah, if it can be interesting, then I guess I'll take it. So yep. Let's see. So yeah, the question right now would be, can we weather any trading outside of the opening range gap for today? So far we tapped to the low with a wick, and that's it. And we are returning a little bit into the range. Let's see. 7 more minutes until the 10 a.m. silver bullet will start, and I guess I'll be just sticking to this point of reference in form of the opening range gap here and the previous days opening range gaps here and here. This will be my points of reference for the key levels basically, and I'll be just watching those. Do I have a bias for today? I don't really have a bias besides just banking around and consolidating. That's my bias for today. So I'm pretty much neutral, expecting some more range bound type of conditions. We'll see what we'll get after this large opening range gap that was clear to the downside. That might be quite interesting. There we go. We close below it. We close below it here. So I would reasonably watch whether we can drop into the lower one down there. We'll see. We'll see what we get. And And yeah, again, I don't have, I'm not like insanely bearish or insanely bullish. I feel like the bullishness, the higher prices are kind of like more likely, but at the same time, I really don't hold a strong bias at all, which basically takes me into the corner of tape reading and watching for the micro market structure to offer something to work with potentially, right? Not every session is a trading session. Let's not lose sight of it. And yep. All right, so looks like we are stopping from rallying right now. Looks like we are making a little bit of a turn in here. And what is getting my attention is this low, high, lower low. So this large up candle here could become a potential bullish breaker. So we trade above it. So I would like to see any trade down into it being capped and act as resistance. I mean, act as support. What am I talking about? But that's just observation. That is just observation. I don't draw much in terms of in terms of importance of it delivering or not. I'm just willing to watch and see and study the price, because at this moment, I mean, we already moved a lot and we cleared buy side and sell side, and right now it literally could go either way, and I don't feel very comfortable and confident about what it wants to do. So instead of gambling on random trades, it's better to just settle down, take time to watch price, observe price, enjoy price, and that's the plan for this session. We'll see. We'll see what we get in terms of liquidity. We cleared lots of relatively low sell side. Yeah, I don't know what it would want to reach on the downside at this moment, so let's watch and see. The interesting fact is that this is technically like the only swing high besides this one, obviously, but that was a stop without manipulation. This is where all the buy side liquidity will actually reside, and this down movement here was pretty scary looking after all, I feel like, for a lot of people. So I wouldn't be surprised if you would wanted to draw a little bit higher. Unless 10 a.m. just started or started just now. We had an expansion movement and now we are seeing a little bit of consolidation. So let's see what will that bring us to us for us. Yep, poking below some short-term lows is quite possible at this moment here. Just consolidating. The breaker isn't being used at the moment, so I don't think we are in any rush to do anything. Why fresh volatility means valuation opportunity is opening up in the US stocks. Yep. Nasdaq 100 leads US futures higher as Amazon surge offsets Apple decline. Yeah, of course. All right, so we are piercing this low in here again. And laying quite a nice wick. I mean, large wick. Right here, so I'm watching that right away. All right, so my anticipation right now is because price traded through this week quite aggressively and it's likely to close below it, I assume or anticipate that unless it posts a body above it on the next candle here, we are somewhat likely to draw down into this lower opening range gap here. So that's something I'll be watching right now. This consecutive encroachment here to the 28,190. Yeah, this is just something to watch right now. I mean, for now, we are at the low of the day, basically. There is quite an opportunity that it may want to slurp towards that old reference point, taking into consideration how it traded around this one and it left it we are trading outside of it significantly here. So that's kind of like the idea where it might want to go. And so far it already drew over 50 candles in that direction. And so let's see. Let's see what can we get out of it. No fair value gaps being formed so far after 10 a.m. So nothing is there in that regard. Buy sell liquidity, the most near-term buy sell liquidity will reside above this 957 candle high. And a small little inefficiency right here. Yeah, I mean, it's hard to expect this one to be very sensitive because how small it is and where it is, I feel like, but let's see. So far we traded up into it. More important to this week, consecutive encroachment, and it's rejecting. So yeah, the 28 190 looks still quite reasonable. Well, and this fair value gap did deliver that. Almost. But it's so close that there we go. We got that level there on the downside, and now we are approaching a new opening range gap. So I'll be watching all of these quadrants levels here in the upper half of it. And yeah, I would assume that if price is any bullish and slash, as I'm anticipating it still to stay inside some of a range. So all of this down move right now, I would assume to be potentially being capped in the upper half of this opening range gap, potentially, and then probably or likely be or show some measure of retracement towards the consecutive encroachment of today's opening range gap. Something like that would be somewhat reasonable or interesting in my mind for the daily range to unfold. But yeah, we'll see. So far we are seeing significant sell-off, very significant sell-off, very large range sell-off also, like that's really significant how much range this Nasdaq is covering during this session today. Like, it's crazy. That's really large range, really volatile market conditions. So if you are wrong / offside inside of these type of conditions, well, I mean, micros can end you with this level of volatility, like literally. But yeah, let's see. Let's see what we can potentially get out of it in here. So yeah, right now, because we are technically in between two opening range gaps, the one from today and the one from Monday is trading. So far it's aggressively trading into it, but generally my expectation is the upper half of this and the lower half of this is kind of like the discount and premium area potentially. For now, we'll see. As long as this consecutive encroachment level stays, that's kind of what I'm anticipating and how the range could potentially meander around. If we lose the consecutive encroachment here, then I will want to see a little bit more info off of that, but let's see. So far we reached the upper quadrant and almost the octane here, but failed by couple ticks. Failed for now, obviously. So yeah, there is a bearish fair value gap here. But yeah, my logic kinda is in a way that we sold off so much of the opening bell that I doubt that we will continue on doing so. And I'm favoring more pullback into the range, especially because it's Friday. I might be wrong, but that's what I would potentially anticipate. Therefore, I would rather like to play something, some inversion, some bullish inversion, some bullish value gap to get me that little bit of pullback into the range, if possible. But yeah, definitely, or clearly, we will see. We will see. So far, it tapped with a wick into this bearish fair value gap here. And let's see if we can make a lower low off of that. Still a little bit room left until the consecutive encroachment. I'm not trying to predict a low also when it's that heavy and that large of a range. Lots of people will want to catch, will want to try to catch a knife, a falling knife, and they they can get hurt doing so very easily. So I'm not trying to do that, and I want to allow the price to make a clear turning point first. All right, so I'm adding the mean threshold of this up candle here to measure the order flow around it. We just touched the octane here, but the bodies are staying above it. So that's interesting. This still looks a little bit too smooth to form a low, I feel like. Just a little bit too smooth. All right, that's good to hear, Yoet. I mean, we will eventually get it back, right? I mean, this month wasn't very easy for me too, so I can relate. But yeah, the main thing is to not get lost emotionally, I guess, and just seek the profits, but just focus on doing the right things and recalibrate. So that's also what I'm trying to do, because the volatility recently is so high. The markets are going up and down with such large ranges that, yeah, it looks amazing in hindsight, but engaging these type of conditions can be tricky. And definitely isn't the easiest, right? So yeah, whenever they lay these enormous type of ranges, they know that, some people will get lucky and they can earn a lot of squeak very quickly. Therefore, I feel like they apply like additional manipulation or additional difficult level of difficulty to it, just to make sure that nobody gets to eat, or very few at least. Exactly. So that's the goal, right? That's the goal. The goal is not one amazing month. The goal is to be consistently very good, even if it sometimes means a little bit red on the month. That's fair. As long as it's not detrimental, it's all good. All right, so in here, looks like we are stabbing lower and lower and lower, failing to touch the consecutive encroachment, and the bodies are staying above this quadrant here. This to me looks like a potential bit of a turning point, especially this up candle here failed to resist the price. So this inefficiency in here might act as a potential inversion for value gap if we close above it. I would like to see it offer support and possibly take us back into the current opening range gap. That's something I would anticipate off of that potentially. So let's see. Let's see, closing above this could turn it into an inversion that could send us back into the current opening range gap. and explore up into the consecutive encroachment. That's how I would see it at the moment. There is a potential busy in the making too. The lows were slightly lower altogether. That's also interesting or reasonable to expect potential turn. Yeah, eventually this fair value gap in here is incredibly polite, but nonetheless it's there. Let's see how it will deliver. But yeah, my idea would be pulling this back into the current opening range gap in here, the lower half of it. I like the reaction of this fair value gap here, and we are going above this bearish fair value gap more significantly. So if we close above it, any return to it, I could probe a long with a stop loss below this candle's low, if that permits my risk appetite. So entering on this candle's high, yes, 125, that's my max risk at the moment. That would be like the, maybe not best case, but a reasonable objective. So let's watch and see. Entering on this 1007 bearish fair value gap after it closed above, I anticipate this to be an inversion fair value gap to send us back into the opening range gap for current day trading. And my stop loss is below this candle's low here, which is also below this fair value gap. So let's see. It wicked below it there, but the body stayed in the upper half. I like to see that. Let's see if we can offer a measure of a run higher off of that. There we go. That's nice. I like to see that. And now stretching quickly and aggressively towards this would be ideal. So yeah, I mean, this sell-off took us into a very deep discount. We couldn't reach the consecutive encroachment of this opening range gap. The bodies were not even close, so that was already indicating some bullishness. Closed above this one, the body staying in the upper half, that's ideal. A little bit of a run. So theoretically, if it's good, it should be running, right? It already gave some initial indications that it might be. But yeah, that still remains to be seen. All right, that's not what I would like to see happening. Trading below this inversion fair value gap is not the signature I want to see. It does, or it did trade to this lower fair value gap, but that's like the last line of defense here. It needs to respond, otherwise the stop loss will be on the table, I feel like. I like how it pulled back into this inversion. It didn't quite close above the consecutive encroachment, but it did a little bit of a pullback higher, so it should be running now aggressively. Well, I mean, this is that little moment where it gets, I mean, it either will be good or bad, right? If it's good, it should run from here. If it's bad, then I'm likely gonna get stopped out. I generally don't like how it's or when it's like this, spending that much time and coloring too much outside of the lines for my liking. So yeah, but at the same time, sticking to the original idea. So I'm watching these little candles here closely. They were coloring outside of this inversion, but closing inside of it all the time. But now this large range back into the fair value gap here. This needs to respond. Otherwise, I'm just gonna get stopped out. I like this turnaround and flip from being here and trading to the low of this fair value gap, and now the body turning up above this inversion. That's ideal. And as we will close potentially above it, the bodies are not permissed in the lower half at all. So this is basically the time to go. Any more wiggle waggle to the downside and I will get stopped out. And the probabilities fall off, I feel like. So it needs to run right now. This short-term high should be taken, and expansion above that should be expected. So that's what I'm looking for. If we will drop and close below the consecutive encroachment or this inefficiency at all, I might be just saving the stop loss and be content. So this is it right now, and let's see if we can get that run back into this current opening range gap, lower quadrant. I like the close above this high. That usually bodes well for continuation higher. There is a volume balance with a fair value gap, so one last time touch into it, it's acceptable. And now large range to the upside. That's what I'm expecting. So I'm watching closely the ability of the price to rally from here and start expanding into that low of the opening range gap, and then probably dig back into it and basically just trade back inside of the range that it formed already from this high to this low, go back into it, and then probably consolidate for the rest of the day. All right, so far we are pulling towards that. That's good. So yeah, this dodgy candle in here and its consecutive encroachment. This is a level that I want to see being breached as soon as possible on a closing basis. In this discount week, I don't want to see it breach at all. It can trade into it, but it should not close below it. If it does, I'll be closing this idea for now and just watching price steal. But as we are approaching this premium week, I want to see a body late above it on the first candle. That's important. That's important. This type of rejection here, I don't like that. We trade to the lower one here. We are kind of like in between. But if we put a close below this discount week, then I will also like get out. Yes, it did. So I'm closing this one here. Break even basically. Why? What is the reason behind it? Just because I didn't saw that much of the willingness to continue, and yeah, I would prefer it to just strongly keep pushing higher rather than just consolidating around here and making this more difficult, I guess, in a sense, to read. But yeah, I guess I have now the benefit of watching what it will do and how it will do after that. It did trade into this fair value gap, didn't close below it, so that's positive. It left relative equal highs, so that's something to watch. Is it still game on? Possibly. If we can reclaim above the wick in here and close above it, then I would say yes. And that's what we are doing. So that's pretty much a game on. And I just, close it when it wasn't looking that well. Maybe overzealously, but regardless, of what it does, and if it delivers the idea that I was looking for originally, that's great. That's great. But if it will fail or offer some hardships that I wouldn't want to, be in, that's also something that, it's kind of like a win-win situation. And I generally don't like these type of slow grinds like this, because many times they do this slow little grind and then eventually they see a stop run that's quick and aggressive, and that's kind of what I was maybe being aware of, or aware too much. Let's see though. Let's not make it too complicated here. But well, we did close above this, so I like that. And basically what this means, or this should indicate, is that the order flow is currently bullish and it should be seeking higher prices. And if that's the case, as I indicated earlier, this opening range gap in here would have been a logical draw on the upside. And where exactly the low-hanging fruit objective would be the lower octane, but also the lower quadrant. So basically anywhere in here would have been like a reasonable high probability draw liquidity on the upside, if we can maintain the bullishness, obviously, and not start closing below it and stuff like that. Yeah, I mean, that's the thing. After such a large range, they are making difficult, this difficult and slow to go through. Even if it's going higher, it's quite of a difficult, quite difficult of a run overall or after all. Yeah, I mean, I took myself out of the equation here, seeing how it delivers, and yeah, we'll see. I mean, that maybe was the best decision I could have made. And I mean, generally, I feel like taking it off or closing it off when it doesn't feel right, in sense of when the price isn't booking that very, very nicely. I mean, maybe I was a little bit too aggressive with this consecutive encroachment of this week. Maybe I should have waited for a close below consecutive encroachment of this bullish fair value gap. Maybe that's the difference, that the little difference that I should have applied, that would leave me in this trade and still be like cutting the losses early potentially. So maybe that was the minute little mistake on my part. But regardless of that, even if it delivers, that's great, because it delivered what I was expecting to see deliver. But if it doesn't, then that's also good, right? Because I was able to escape early and save myself a loss. So yeah, obviously, as it's grinding higher slowly and surely, I feel like these targets of mine are more likely to be approached with some large ranges. But yeah, what can I do? I already decided to close, so that's it. So right now we are also technically in between those opening range gaps. So this is also kind of like a no man's land, maybe besides the event horizon in between. But yeah, if it's not really piercing through that range quickly, then I'm usually not a huge fan of holding a position like this, especially in the conditions that are difficult, volatile, and highly manipulated. It feels like asking for trouble. And yeah, so this fall off in here is already telling a lot, and that with that in here I would likely get stopped out. I feel like likely, because there was basically no stop run inside of this run up, even though it's pretty much high resistance liquidity run higher. So at least this low is in danger, but in here we have relatively cool lows. So yeah, it becomes a little bit iffy, a little bit problematic, and that's what it is. So yeah, I definitely wouldn't be comfortable with this type of retracement here. Even if it would or could still deliver higher, that type of retracement wouldn't be pleasant to go through. Right, so it tapped one more time into this fair value gap here, reacted quite nicely off of that, body stayed away, and it has this little bearish fair value gap that it trades into. So I would anticipate or expect this to become an inversion for value gap, and just don't offer much resistance and let the price go higher, right? This is like key point again where it could fail if this offers resistance. I would not like to see that. It's slightly close above it, very slightly, but it did. So that's positive. And let's see if we can bulk up around here higher. It did left some relatively cool lows in here, and they are definitely a little bit suspect. So because we traded into this fair value gap here already once and twice, the third time we are probably going for the lows. And that's kind of what it looks like. So let's see. And I guess that's fine. I don't really mind that. If we do that and we offer a reasonable discount again and respect that, I could consider another entry with the same logic and the same idea of drawing up into this level here. And I mean, I would feel a little bit more confident if we would have a stop hand behind us. But let's see, because looks like it's stretching higher already, leaving this to the upside, so that might not be the case. Making another slightly higher high, but all of this run up is super high resistance. Yes, it delivers higher, but it does it in a very muddy, slow fashion with very deep and sudden retracements that are quite scary inside of this volatility, right? You never know. And they can always come back for these type of stops. Like, this is easy liquidity to get. That's why I wouldn't be super comfortable holding this. Even if it delivers, right? That just wouldn't be a very comfortable hold. So this is kind of like the theme of today's trading session. But well, I guess that's quite expected after such a large range on Wednesday, such a large range on Thursday, and today morning session, today opening range was already like insanely large too. So eventually the volatility will be slowing down, and that means high resistance, liquidity and conditions. And that's what we are seeing here. All right, nice large up candle here, very close to the opening range gap low. And if we can touch that, I believe we will maintain a run up into this area here. And that was my objective for this silver bullet hour. keying off of this inversion for value gap here. Quite high resistance, but looks like it's gonna deliver here nonetheless. So well, nice read, nice feel for it. Like reasonable entry. Execution was decent, but just the conditions of the price delivery in here made me want to adopt it and exit the trade on break even. So I guess it is what it is. It would have been nice, very nice to end up this week with a little bit of recuperation and a little bit of win that could recoup a little bit of the drawdown, but it is what it is. Yeah, if only I wasn't that aggressive about it, then yeah, probably that would have been a very nice W. But yeah, small little mistake makes huge difference in trading. Huge difference. So if you think about it, if a small little mistake can make such a huge difference, then what a difference would a large mistake make? Yes, also the last thing that I want to check and measure is about this little fair value gap in here. And yeah, it actually formed technically at the event horizon, so midpoint of this, between those two opening range gaps. And that, I guess, makes it engageable in a sense. So theoretically, I think there were two opportunities for the silver bullet to find something, and one was this value gap here, this little one at the event horizon to reach into the upper quadrant, and then from this inversion here to reach up into this lower quadrant and or lower octane, right? But generally in this area here would have been nice. Let's see if that will be actually booked, but I think that's very likely at this moment. Very likely that it should be booked. All right, falling off the cliff here, leaving relative equal highs just below the drawn liquidity that I was looking for. All right, it pulls back deeply here. So classic high resistance liquidity run, classic denying of the target, deep retracement again. Way deeper than anyone would like. But yeah, that's what it does. Trading into this inversion here and rejecting that nicely. So let's see now if it can get it. Would have been interesting though. And if that's the case, this should act as inversion for Varigap 2. So it should not resist the price. So let's see. Theoretically close above it. From here to this quadrant. Reasonable, but no close above it. Bodies in the lower half. That warrants a potential deeper run. And if that's the case, these lows are definitely too smooth. And that's overall a difficult price action because it's high resistance. That's the nature of it. It's being difficult. So it's easy to get stopped out. It's easy to make a mistake. It's easy to get it wrong. And it's hard to trust the price action delivery, which is the whole point of this session being definitely difficult to trade. Not impossible for sure, but still executing on it takes some more balls, I guess, some more convictions versus a low resistance liquidity run condition. Yes, exactly. Next month we start fresh, and that's good. That's a part of life of a trader. Well. So nonetheless, looks like this is it for this silver bullet hour for the morning session. I tried using this inversion for value gap here to reach up into this quadrant, lower quadrant. It offered majority of that range. The objective is still potentially there, but the run overall was high resistance, which made me close the position at break even. And this is, it is what it is, right? It is what it is. Do I want to push hard inside of this condition? Do I want to re-enter? I mean, I know if it's high resistance, that's a bad idea. Generally, majority of the time, it's a bad idea. And yeah, many times this market will want to lure you into thinking that you know what it's doing, where it's going, but then pull off some shenanigans and wicked runs. But nonetheless, maybe the PM session would have been better technically. This session was rather quiet, rather poor. So PM session maybe would have been better, but yeah, that's as far as it goes. So yeah, nonetheless, thanks for watching. It was a pleasure as always. I wish you guys a pleasant weekend. Rest well, be safe, and see you next week. And yeah, kudos to you guys. Bye bye.